Let's just focus on what's happening in the auto sector. Well, we have Kumar Rakesh, India analyst, auto and IT at BNP Paribas now joining us to take some questions. Kumar, great to have you with us here. Good morning, appreciate it. You know, the only talking point has been rare earth minerals and restrictions, etc., around it. And we've had, the SIAM president, the FADA president, and other analysts, etc., coming in as well. So I just wanted to get that out of the way first. Do you see that as a significant, recurring, continuing kind of problem, or you think it'll get sorted? The main issue was, of course, US, China, everybody else also getting hurt along the way. But what is your sense?
Morning, Prashant, and thank you for having me. Rare earth will start impacting the automotive industry, both two-wheelers and passenger vehicle. But we think the supply chain still has some inventory, and that should take care of production till the end of July, sometime around July. And the hope is that by that time, we would get some resolution around this in terms of negotiations which are going on. But if these negotiations do not fructify and result in the easing of the supply, then possibly by end of July, the supply will start drying out. Companies which have inventory possibly may still have some of the headroom to continue to show dispatches. However, towards the end of July, we'll start seeing some of the signs. And it will not be restricted only for EVs. Even the ICE vehicles will start seeing an impact.
Hi, Kumar. Good morning. Good to see you, Ben. Let's focus on Tata Motors. You know, they had an analyst meet and they sounded very optimistic, right? Market shares they're going to be gaining. They're talking about improvement in terms of free cash flow. And also they were saying that, their focus really is on profitable growth. However, there are various challenges and, the business is very dynamic in nature. What did you make of those takeaways that you got from that analyst meet? And also, if you could tell us your view on the stock?
Hi, Nigel. Yeah, so the targets are quite aspirational, both on the commercial vehicle business as well as passenger vehicle business. Some of them are reassuring. We have seen Ashok Leyland expand margin quite smartly, and seeing Tata Motors also targeting similar expansion in margin in the coming years, despite the cyclicality of the business, is quite assuring. They are also targeting market share expansion in the CV business, primarily driven by a small commercial vehicle. We'll have to see how much of that is possible given the intense competitive intensity that we have seen, especially getting into the small commercial vehicle business. On the passenger vehicle business, they have lost a bit of market share over the last year, and they are targeting to start expanding their market share in the coming couple of years. They are backing that with multiple model launches. But the challenge is industry is now going to see a significant model launch across major OEMs, be it Mahindra, be it Maruti. Most of the top OEMs are going to see a very expanded portfolio in the coming years. So it may not be easy to expand market share, plainly driven by model launches. The strike rate of those model launches becoming successful needs to be very high. And so while we are quite cautious in terms of what kind of market share expansion in this environment is possible, but that is what they are aspiring, coupled with the margin expansion as well. So while we are not as enthusiastic about the market share expansion, we do expect the margin to expand from where it is today. And more importantly, valuation seems to be quite attractive. On our numbers, the stock is trading at about 7% free cash flow yield, which looks very attractive to us. And hence the downside risk in this stock seems to be quite limited.
Okay, so Kumar, that's one idea, Tata Motors. Anything else? Because the thing is that with the auto space, barring Bajaj, barring M&M, and recently Eicher started doing well, it's become a sort of a complete damn squib of a sector, if I could say. Anything else? I mean, would you look at Maruti or Hyundai? I mean, the PV guys at all?
Hi, Surabhi. I'll completely agree with you. Actually, we are getting into a phase in which the growth for the industry in general is moderating. Most of the segments are going to see low single digit to mid single digit sort of a volume growth. And hence, we'll have to become quite selective in terms of what stock we are looking at in the automotive space, especially in the context of the valuation at which they are trading. And in that context, Mahindra obviously stands out. But some of the investors are getting concerned that the trade may get crowded out because it's becoming a consensus buy now. What we see beyond Mahindra, Ashok Leyland starts looking very attractive. All the lateral data that we have been tracking is indicating that the commercial vehicle business should start getting into an upcycle. And Ashok Leyland would be entering this upcycle with the highest margin they ever had, one of the best free cash flow conversion they have seen in the history. And as they enter into the upcycle, these numbers are only going to get better from here. And valuations are quite palatable in case of Ashok Leyland. So that's another cyclical pick that we see looking interesting for the current financial year. Looking a little longer, Maruti Suzuki also starts looking very exciting. Their export strategy continues to do really well. We think that they'll surprise positively on that front. And on the domestic front, they are going to start seeing the model launches in the next couple of years. And usually the stock has done in the environment, in the period in which they have been launching new models. And that probably will start seeing in the second half of this year.
Absolutely. You know, we have the Chola Finance management joining us a little later at 9:30. And I was just sort of reading through some of what they presented at the Morgan conference, which just finished, and they were talking about how CV sale volumes are still pretty tepid. Government spending, etc. so far this year it's not picked up materially. So, you know, it'll give you a kind of a connection across other CV makers, etc. as well. We'll see. But do you have coverage on Kumar on auto anchs?
Not much.
Okay, not very much by way of coverage. You know, just one more, if I can sort of squeeze in. I think you have coverage on the IT services space as well, right, Kumar?
Yes.
So if I can, you know, go off track here from auto to IT. Just wanted your thoughts on Coforge, because we've got very strong commentary coming in once again from the Coforge management. Again, at some of these conferences, seem to be completely immune to whatever else is happening in the sector, execution, etc. Deals which are already locked in. So just wanted your thoughts there, Kumar.
Yeah, so I don't cover Coforge specifically, but the IT services space, specifically some of the mid caps, are going to see some benefit, partly because of the focus of enterprises on cost takeout deals, because inflationary pressure is possibly going to increase, partly because of tariff, partly because of just the slower macroeconomic environment. And hence, we could potentially see some of the Indian IT services companies benefiting out of that. We regularly track the deal win momentum. It slowed down in the month of April and has been largely steady in the month of May. But more importantly, the BFSI space, where some of these mid-cap companies are relatively very strong, continues to be very strong despite the deal signings by BFSI companies, seems to be very strong. And that suggests that some of the companies may still continue to see relatively lesser impact of all the trade tariff and the macroeconomic concerns that we are seeing.
Okay. All right, Kumar, thanks very much. We will leave it on that note for both autos and for IT. Good conversation this morning. Thanks for joining in today. Well,